Are you tired of navigating the confusing world of online investing, wondering which platform truly has your back? Do you want to grow your wealth but feel overwhelmed by the sheer number of choices, each promising to be the best? Well, you're not alone. Many aspiring investors face this exact dilemma, trying to distinguish between flashy marketing and genuine value. Today, we're diving deep into two of the most talked about names in the brokerage space, Ally Invest and Robinhood. We're not just scratching the surface here. We're going to dissect everything from their fee structures and available investment options to their trading platforms, research tools, customer service, and even their philosophies on investing. By the end of this comprehensive breakdown, you'll have a crystal clear understanding of which platform aligns best with your financial goals, your experience level, and your personal investing style. So, whether you're a seasoned trader looking for advanced tools or a complete beginner just dipping your toes into the market, stick around. This is the ultimate showdown, Ally Invest versus Robinhood. Let's get started. The genesis, understanding their core philosophies. First, let's talk about the fundamental differences in how Ally Invest and Robinhood approach the world of investing. This isn't just about features, it's about their very DNA. Robinhood burst onto the scene with a revolutionary idea, commission-free trading. They democratized investing, making it accessible to a new generation of users, particularly younger, mobile-first investors who found traditional brokerages intimidating. Their core philosophy is simplicity and ease of access. They wanted to make investing feel as effortless as using a social media app. This mobile-first approach, coupled with zero commissions on stocks, ETFs, and options, resonated deeply with many, pushing the entire industry to follow suit. Robinhood's strength lies in its user-friendly interface, quick execution, and a focus on getting you into the market with minimal friction. They are built for the modern, active, and often self-directed retail investor who values speed and convenience. Ally Invest, on the other hand, comes from a different lineage. As part of Ally Financial, a well-established online bank, Ally Invest offers a more holistic financial ecosystem. Their philosophy leans towards comprehensive financial management, integrating banking, lending, and investing all under one roof. While they have embraced commission-free trading, their appeal extends beyond just low costs. Ally Invest aims to cater to a broader spectrum of investors, from beginners who appreciate their robo-advisor services to more experienced traders seeking a wider array of investment products and more robust analytical tools. They emphasize financial wellness and providing a full suite of services that evolve with your investing journey. So, already, you can see a divergence. Robinhood, the disruptor, prioritizing simplicity and access; Ally Invest, the established player, focusing on integrated financial solutions and a more traditional, yet modernized, brokerage experience. Fee structures, where your money goes, or doesn't. Now, let's get down to the nitty-gritty: fees. This is often the deciding factor for many investors, and both platforms have compelling offerings. Robinhood is famous for its commission-free model. This means $0 commissions on stock, ETF, options, and even cryptocurrency trades. This was a game-changer when they launched, forcing many larger brokers to drop their own commissions. However, it's important to understand that commission-free doesn't always mean totally free. Robinhood does generate revenue through other means, primarily payment for order flow, PFOF, where they receive compensation from market makers for directing customer orders to them. While this is a common practice in the industry, it has drawn scrutiny. For the average retail investor, the direct cost of trading on Robinhood is indeed very low. They also offer Robinhood Gold, a premium subscription service at $5 a month, which provides benefits like instant deposits, professional research, and a higher interest rate on uninvested cash. They do charge a $100 outgoing ACAT transfer fee, which is on the higher side if you decide to move your investments elsewhere. Ally Invest has also largely adopted the commission-free model. They offer $0 commissions for eligible U.S. stocks and ETFs. For options trading, they charge a competitive 50 cents per contract, which is lower than many competitors, though not as low as Robinhood's $0. Mutual funds, however, carry a $9.95 per trade fee for no-load funds, and they don't offer any no-transaction fee mutual funds. They also have fees for certain low-priced securities, under $2 per share, charging $4.95 plus 1 cent per share. For those utilizing their robo-advisor, Ally Invest offers a unique cash-enhanced portfolio with a 0% advisory fee, where 30% of your portfolio is held in interest-earning cash. Their market-focused portfolio has a 0.3% annual advisory fee. IRA annual fees are $0, but there's a $50 IRA transfer fee and a $25 IRA closure fee. They also have various cashiering fees for things like wire transfers. The verdict on fees: for pure stock, ETF, and options trading, Robinhood has the edge with its $0 options contracts. However, Ally Invest's options contract fee is still very competitive. If you plan to invest in mutual funds or have a more complex portfolio, Ally Invest's fee structure becomes more nuanced, and you'll need to consider those specific costs. Robinhood is definitely the winner for the absolute lowest direct trading costs across the board. Investment options: what can you trade? This is where the platforms start to diverge significantly in terms of breadth and depth. Robinhood offers a streamlined selection of investment products. You can trade stocks, U.S.-listed stocks, including fractional shares, which means you can invest with as little as $1. ETFs, exchange-traded funds. Options, equity options, often with a simplified interface that can be appealing to new options traders. Cryptocurrencies, direct access to buying and selling a growing list of cryptocurrencies, a key differentiator from many traditional brokers. Futures: as of early 2025, Robinhood launched futures trading, expanding its offerings for more active traders. What Robinhood doesn't offer is equally important: no mutual funds, no bonds, other than bond ETFs, no international stocks directly, and no Forex or futures, though futures are now available. This limited range simplifies the platform but might restrict investors with broader needs or those looking for specific asset classes like fixed income. Ally Invest provides a much wider spectrum of investment products. Stocks, U.S.-listed stocks, including OTC/penny stocks, with specific fees. They do not currently offer fractional shares for self-directed accounts. ETFs, a wide selection. Options, equity and index options. Mutual funds, a vast selection of over 12,000 mutual funds, although with a $9.95 transaction fee for no-load funds. Bonds, corporate, municipal, and U.S. Treasury bonds, with a transparent fee structure. Certificates of deposit, CDs directly through Ally Bank. Forex, foreign exchange trading is available. Robo-advisors, their automated investment portfolios offer a hands-off approach. Managed portfolios, for clients with larger assets seeking personalized advice. With that said, thanks for watching, and until next time.